We are amped for this edition of the Equity.Guru Equity Roundtable or Investor Roundtable. Did I just use the pun of puns? Amped. We are amped because we are talking about amped. I'm Rob. Down here in the basement with me is Vishal. What happened to us? My landlord upstairs, TK Indicena, and then the guy that's running the whole apartment building, upper left, is Chris Perry. Hey, amped Chris Perry, you know a lot about these people. Anthony Brown's the CEO. I'm going to read you his quote right on the website. The team at AMP, that would be AMPD, which is their symbol, by the way, on the Canadian exchange, have been providing high-performance computing and infrastructure solutions to leading games and digital media companies for nearly 20 years. Does that sum it up?
Well, it's hard to sum this one up. Look, I'm close enough to this that I could give the oral history at university that would be about the dawn of this company. In a nutshell, these guys have been around the high-performance computing scene for about 15 years. They've had previous companies that had nice exits. They've published successful games. They've built successful studios. And with AMP, what they're looking to do is, if you've ever seen like Ready Player One, the Steven Spielberg movie about a future where we all live in basically a virtual reality game, the network that you'd need to run such a thing is not the internet right now. The internet is built for e-commerce and sending video in one direction. If you were having some sort of virtual reality existence or a heavy dependence on AI, like real AI or augmented reality, all the things that big tech really wants to make huge and feels like is going to any second. In order to do that, you've got to upgrade the internet. And the internet doesn't, at this point, play nicely when you need a lot of data dealt with. So currently, most of the world uses either Google, Microsoft, or Amazon Web Services. They set up sort of a one-size-fits-all hosting situation. So if you come along and you're like a video animation company and you need like thousands of hours of video rendering, if you do that on Amazon Web Services, you're paying a massive overage fee for all the data that you're using. And you're also sharing computer servers with 1,000 other people who are, selling underwear or penis enlargement pills or whatever's out there. So sometimes if Amazon's having a Black Friday sale, as an example, suddenly everything slows down and your video job gets knocked out. It's just, there are an increasing number of companies that require an extensively large amount of compute. They don't want to set up their own servers because they're only using them sometimes. And so what AMP is doing is creating web services that is bespoke for those clients. So as an example, one of their first clients was a company that animates the Rick and Morty show, as well as does a lot of animated movies. That was the sort of proof of concept that these guys have set something up in place that can be scalable to a larger audience. The problem has been not that the technology is not great or that there's no demand for it. The problem has been that in coming to the public markets, what happened to them is what happens to every first-time CEO. The guys with the money came in, were really happy to bring it in. We'll give you this, we'll give you that, paid themselves with a lot of stock. And then 2 months in, suddenly there are brokers around saying, hey, pretty nice job you've got on that stock price rise there. It'd be a hell of a shame if suddenly it went downwards. Why don't we do a cheap financing for all my guys? And when they said no, suddenly there's a big short on the stock. Suddenly there's a whole bunch of selling in place. And the stock goes from 35 cents to 70 cents in a couple of weeks and then tracks all the way down into the 15 and 20 cent. So right now, this is a rebuild. There's a couple of problems with the company. If I'm being completely honest about it, I think the company loves the technology and is really good at speaking to people who get the technology and is really bad at speaking to people who don't. Mm-hmm. And a lot of investors, retail investors, institutional investors, they don't understand what volumetric cameras are. They don't understand augmented reality. They barely understand virtual reality. They think it's the Lawnmower Man from 1985. So you read the website, you read all their news releases, they're full of insider jargon. They don't really describe a gettable vision for most of the average Joes that you really want to get into the company to build a base. Now, what's happened recently is they've got a couple of big swinging House Street dicks to come in and take a sizable piece. The company started to run on the stock market again. The guys that maybe were tying it down earlier are out of the way. People that we're going to sell have sold. Full disclosure, I own a significant piece of this company because I know the people and I understand what they're doing. And I think what they're doing is great and going to be really important going forward. I have been frustrated at the progress of getting the ideas out there in the public in a way that everyone can get behind. If you understand what virtual movie production is, which basically is the end of the film studio with green screen, what we have instead is studios that are being built all over the world that are gigantic LED walls that are built with video game engines. So a director can say, okay, we're on Mars, hit a couple of keys, and Mars is in the background. We can say, move the sun so it's 5 o'clock in the afternoon, the sun is moved. We could use a tree over here and an alien over there, and these things can be done. So the actors, instead of walking around in green leotards with ping pong balls all over them and guessing where Godzilla is behind them, can actually turn around and see Godzilla, that the reflection of the light from Godzilla will be tracking across them. It's an amazing thing. If you've seen the latest Star Wars series, The Mandalorian, that's how they did this thing. Yeah, if you can bring up the Millennium Falcon behind you at a couple of clicks of a button, instead of having to build a Millennium Falcon, you shoot the movies a lot quicker, a lot cheaper. You see them as they're going. They don't require 3 months of reshoots after the fact because you missed a bunch of stuff. It's the future of Hollywood, and AMPD is at the forefront of this. The reason I'm going on and on about it and telling you it is because they're really struggling to get that message across. Once the message actually does get across and the revenues start coming in for this stuff, I believe that this is going to be a ball buster. It's going to be a massive success. But I've been saying that for 2 years. So, the time has come.
Charts, Vishal, what are we looking at investors and progress that Chris is just referring to?
Yeah, so I would say I'm one of those in one of the categories that Chris just mentioned. I don't really understand the tech too much. I mean, I get a sense of it when I read their PowerPoint, but Chris just basically outlined it really well, and sounds like a disruption tech to me. Stock-wise, I mean, we were talking about it was a bit frustrating for shareholders for some time. The stock was really just ranging in that 15 cent to 20 cent level. We had a bit of a pop earlier in the year, but then we just began to range once again. Just recently, so this is, I guess, the big wigs jumping in, but we had a breakout here of my triangle. And in those few days, well, in less than 2 weeks, we had about 100% gain on the stock. And currently, year to date, the stock is up 77.27% with a market cap of just 18 million. So it seems quite reasonably priced there. Finding some resistance at the 50 cent zone. If I zoom in here, you can see that large wick hit 50 cents, we sold off. That's quite normal for, I think, these small caps, generally 25 cents, 50 cents, 75 cents, and then the big $1 zone are sort of large psychological resistance zones. But we hit the 50 cents here, and now we're building a base here at the 40 cents level. You can see here for a week, we've basically just been ranging here up and down. And if I scroll out, I just want to show you how, well, in technical terms, we call it a flip zone, but it's been a support and resistance level way back in 2019 and 2020, and finding some support there. So if we can hold, there could be another momentum rally coming forward.
Let's go up to my landlord upstairs, TK. What are you thinking about when you see the AMPD?
So there hasn't been much happening on the financial side since we only have stuff until from 2019. But kind of echoing what Chris was saying, that the idea that they have is something that's obviously needed, processing-wise, big data analytics-wise, and the solutions that they're offering are needed. And I found in their reports, they have a neat little line, and they say, this is how we measure ourselves. They measure ourselves through new customers, revenues, operating expenses, and net income. And I was like, oh, you know what? They made it easy for me. So they, obviously on the technical side, it's a little bit difficult for them to explain how it is, and investors get really, cautious when that stuff like that happens. But on the business front, it's a pretty simple business model. And I'm going to bore people with the details here of just going through that list, but we can actually go through the sales revenue, just like they put through. So new customers, since January, they launched AMPD Flexible Edge. with Versatile Media, just another one of the clients. They also, just today, they announced they're an agreement with IO Industries, a digital camera an equipment company.
Yep.
And that was just earlier today. And you can kind of see that, okay, on the new customer front, they have been getting new customers coming through. And it's also reflected in the sales figures. They generated almost $1 million in sales last year. And for the last 12 months, I think it's up as well. And for 2019, it was $1.94 million in sales. But the catch of all things is, to get that business, they have to expend quite a lot of cash on advertising and promotion and professional fees, salaries, consultation fees, data center costs, and what Chris was talking about the share-based compensation, which was half of the expenses last year. Accountants will count it as a non-cash expense because cash is not actually leaving. So it makes their performance look a little more terrible than in what it actually is in reality. And I think a lot of investors look at that and they back off from the stock because it looks like management is, or it looks like they're compensating themselves for business performance that's not there. But that's obviously not the case. They're acquiring new customers. Their operations are becoming more efficient. It's a very asset-light business. It doesn't hold much cash as well. It's mostly lab assets, or their property, plant, and equipment is what they call it in their accounts. So I think they have close to $1 million. I might be wrong with the property, plant, and equipment. It has no debt, and it's mostly funded through equity. So it's a asset-light business that's not debt heavy, generates sales. It's increasing in new customers, and that meets all their business metrics that they actually want to be measured by. But it's just selling the idea of how they generate the top line that's kind of difficult for people to understand. And I get the market's pessimism because the top line is the clearest line to if the business is actually working or not. If you're able to generate sales and have high volume, especially as a tech-based software company, or I say software, but a cloud-based company, you can have fixed costs that are pretty steady. And as you generate more sales, you have more gross margins, and that's reflected in their gross margins as well. It went from 10% to 50% last year. So operation-wise, things are going well. It's just investors are not really before the recent run, are not really appreciating what's actually pushing the engine, because it's a complicated thing to explain. Amazon, Baba, and all the other guys who were able to do it at scale is only because they've built a brand around something else and people are comfortable with that. But they focus more on enterprise software. So it's a different industry completely. And it's easier to sell that than to companies that haven't used it traditionally, who are now being implemented to come and try to take it in. And investors are kind of like, oh, why take the niche approach when we see the scale works with Amazon, Microsoft, and IBM with their cloud software. So I kind of get where the stock is kind of confused to put it in a price.
So we're going to go quickly around the horn, especially given the fact that Chris has already pointed out he's a stockholder. But at 40 cents, so next week, Monday, I wake up, what am I doing, Chris?
Well, look, I think if you're a long-term investor, this is an interesting stock, right? As Vishal said, the market cap is not blown out. It's pretty tight share structure. There's some big fish swimming around it. And each one of their clients is one good quarter away from saying, hey, that's a nice deal you got there. Why don't we just make you our web service department? The reason that Amazon is big in the web services deal is because they created the world's largest server farms, because a couple of days a year on Christmas and Black Friday, they require a monster amount of server capacity. But for the rest of the year, they thought, well, we've got all these servers, what are we going to do with them? So they created basically the Squarespace. What Squarespace is to web creation, Amazon Web Services is to web hosting, right? So one size fits all, put your name and your credit card in and start uploading your website. If you want anything beyond that, it's expensive, it doesn't really work. So there's a lot of people early on that said, well, as soon as AMPed lifts off, the big guys are just going to come in and say, yeah, we'll have that industry. Problem is, the big guys don't want that industry. That industry eats into the big guys' bread and butter. They'd be cannibalizing themselves, right? They'd be making a move like Disney made, going to Disney Plus instead of movie theaters. It'd be such a big lift that it would fundamentally change everything that's making the money right now. So AMPD, I think, has a good 5 to 10 year span where it can grow hard and make good money doing this. Just lastly, I asked Anthony, the CEO, recently, hey, why aren't you just like using your hosting for Bitcoin mining? The markets would love that. The markets would pay you a big dividend on that, even if it wasn't necessarily the best use of your facilities. And he said, you know what, we make more margin doing what we're doing. Bitcoin stuff, it's just not as much money as you think. The markets love it. And if we did that, then we'd just be catering to the markets and we'd have to undo it in 6 months' time. What we're doing here is the big fish play. It's the $1 billion move. If we continue with it and we keep doing the things that we're doing and keep making the partners we're making, like Versatile Media is the leader in LED wall virtual movie studios, and they're partnered up with AMPD, like in a 50-50 way. So, I think they're doing all the right things. I'm not selling anything at this price, and my average is lower than the current price today. And I've been sitting on it for a long time underwater. I'm not buying anything more just because if I did, I'd have to start filing. But my thing in this has always been, I'm betting on the jockey, and I'm betting on the fact that this is going to be an industry that is going to pop maybe this year, maybe next year, maybe the year after, but it's going to be monumental, and they are where they need to be.
All right, Michelle, I'm looking at you and I'm giving you 30 seconds because we're a big, heavy roundtable today.
If Chris is in, I think I'm going to jump in too. I might just be a bit more strategic if I want to wait for a bit of a pullback. But right now we're ranging here. I would maybe throw $1,000 to buy some here, but there is a danger that it could pull back if we do break below that. But this is definitely, as Chris said, a long-term play. I get to understand a bit more of the company now, and it looks like a disruption tech to me. So I would be putting some in.
Yeah, that was good. It was efficient. TK?
Yeah, I'd also just want to point out May, the CEO, Anthony, and his CTO bought close to 125,000 shares. That's public info. It's there. But that was around May. I think the price was around 28 cents.
Just before the big pop?
Yeah, at the time. So if your insiders are buying, I'm buying as well. Yeah, a bit on the jockey and the horse.
They have skin on the game. That's always great.
There it is. AMPD, AMPD on the Canadian exchange. Past results, blips, all that doesn't guarantee future performance. So make sure you do your own research, your own homework, folks. But you've got a lot of information here today. Holy.
Should also point out, not a client, just something that we invested in because we believe in it.
There you go. Thanks for joining us. AMPD, Canadian Exchange, for Vishal over there, and Chris, you way over yonder, and TK, my landlord, upstairs. See you next time on the Equity Guru Investor Roundtable.